We have Kunal Shah, the analyst at ICICI Securities, who joins in now. Kunal, good morning. We all know that it's been a stable quarter for them in what was really challenging environment. Asset quality was decent as well. But you tell us, what is your advice on the stock itself? What's your target price now?
Yeah, morning, Sonia. Overall, when we look at it in terms of the quarterly earnings, resilience was displayed and earnings momentum continued at 18% plus. So we have a buy recommendation on the stock with target price of 1818.
Okay. Are you more at rest with the asset quality and are you a little more worried that the NII is not grown much and may not grow anytime soon?
So overall on asset quality, if you look at full year FY21, which was the year of pandemic, their slippage run rate were 1.7%. The credit cost was 1.5%, and this includes 30 basis points of contingency buffer, which was created in FY21. There was another 30 basis points, which was created in FY20 as well. But 1.2% credit cost, excluding contingency buffer and restructuring also being very low at 0.6%. All this clearly suggests that asset quality has been holding on pretty well for them. And this year, in fact, when we look at the growth, it's primarily coming from the secured segment. So within retail as well, it's more of a home loan, gold loans, business banking, which has grown relatively higher. So to that extent, I think on the asset quality side, it's comfortable. And as far as margins are concerned, in fact, that is also holding on at 4.2%.
No, not margins, Kunal.
Overall advance.
Not margins, sorry? Kunal. I'm referring to growth itself. You know, they can't issue credit cards and NII is under pressure.
Yeah, so I was coming to growth. So when you look at, there was some moderation on the growth side compared to that of more than 20% run rate, which has been there over past 3 to 4 years. In fact, this year it's 14%, which is compared to the industry and the other peers. When we look at it, it's still much higher. And I think next year, when we look at it in terms of the outlook, retail, which has grown at 6 to 7% in this fiscal, that will add on to the growth in the next year. So I think this time the growth was more corporate-led, and it was more to do with the base effect as well. In FY20, there was a higher base. So on that, we are seeing 14% growth, but retail adding on to it, unsecured piece also with this some revival in the activity which was there, that will add on to the growth. So retail plus corporate put together would again take them more than 15% in the next year.
Okay, got that. All right, Kunal, thank you very much for joining in and giving us your quick take on the HDFC Bank numbers. Prakash, I have one more result for you. ICICI